Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're jumping down into the charts for Ethereum, taking a look at what's been going on most recently and what I would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now if you have not yet joined us in Discord, link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. So why not check it out today? And if you haven't already checked out the new podcast, link is also in the description down below. Fantastic, easy listening for crypto related things, news, events, and technical analysis occasionally on the podcast whilst driving to the office or on the train and on your daily commute. Why not check that out as well in the description below. Okay guys, let's waste no more time though. Let's jump down into this, right? So Ethereum paired up with USDT on the hourly chart. Binance is the data source. And yesterday we were talking about a couple of things, right? We were saying, okay, we had a little bit more room to the downside, okay, with this Y wave. And we were saying, okay, we were kind of targeting out, you know, the low 1000s, right? 1010 approximately. But and, you know, at that point, you know, we had said, you know, we're currently at 1043. But if we were to go up higher than 1125, then actually that's kind of confirming that we're pretty much done with this low, right? So this is one possible scenario, and I do think it's highly likely that actually what we've done here is just had this really shallow Y wave. Okay, we've kind of pulled that back, but it is also possible, and we should acknowledge that this up here could be an X wave, right? And that's our W, that's our X, and we've still got to come down into our Y to complete this entire correction before we can even start the next 5-wave structure upwards, right? That's also a possible scenario, and you get confirmation that that isn't the case as soon as we cross higher. If I grab hold of this and put it on the right area, higher than 1194, right? So if we can push up and we push up higher than 1194, then that would put us into a pretty good spot to start thinking about, you know, that actually not being the case. And we can then go ahead and effectively just move our W, our X waves, and our Y waves back over here. Okay, so if this is the case and we have already started our move to the upside, then actually, you know, we should be looking for some kind of, you know, wave 2 down. We've got to have a wave 3 up, one of wave 4 down, and then final 5th wave up higher, right? And if this is our low, then what we want to do is we want to grab a fib, okay? And this is something that actually, if I just draw this on here, something I talk about occasionally, but maybe not that often. So if you're new to the channel, you're not overly familiar with this, right? I have my charts on logarithmic scale, and because my charts are on logarithmic scale, it's very, very important to have the Fibonacci retracement tool on logarithmic scale. It's not done by default. You can't just toggle the logarithmic on your chart and everything becomes logarithmic scale. So what you do is you come into your settings for your fibs, you then scroll all the way down on your style, and you hit this little tick box that says fib levels based on log scale. Once that is done, your fibs are then calculated in the same way that your log scale is calculating, okay? So that's really important. Okay, so with your Fibonacci retracement tool matching up with your chart, so if you're not using log, then you can't use logarithmic on your fibs. They have to match with the chart doing it, right? All that good stuff. But what we're going to do is we're going to take a measurement, right? It's going to be from the top of this 5-wave structure here on the left, and then we're going to pull this down to the start, the origin of this, right? So we have that entire measurement as a 100%, right? We go from 0 to 100%, right? That's exactly what this fib is doing. And inside it, you have waves 1, 2, 3, 4, and 5. Right, what I do is I grab that fib, right? It's locked in, okay? The numbers might change, but the measurement is still 100%. The distance from origin to the top of wave 5 is 100%, no matter where I move it. So what I'm doing is I'm moving this over, okay, to the bottom of our correction here. Okay, so it still matches 100%. And what this is then doing is it's basically saying, okay, well, if our A wave is equal to our C wave, okay, so we have this is a giant A wave, this is our B wave, and this would be our C wave, right? Our C wave should equal most commonly, okay, it's not a hard and set rule, but most commonly is 100% of A wave, meaning that the same distance, a 1-to-1 ratio with A and C. It's the most common relationship between an A wave and a C wave. So knowing this would actually indicate to us that our final 5th wave high should be about $1,413 based on this low point. Now, if we, of course, were to drop down lower, then that would lower our higher range target, okay? But because it's where it is, we can basically go ahead and say it's approximately $1,413 is where this next 5-wave structure is likely to go. Okay, perfect. Now let's talk about maybe the minimum requirement. What would be the minimum requirement for a C wave? Well, the minimum requirement for a C wave is actually under this particular structure up here at the high wave of 5. Okay, so 1194, that area that we spoke about before. Basically create a double top. Okay, of course, we've got other things like the 618, the 702, the 786, all these other kind of fib areas that we might go to. But most commonly, it's going to be a 1-to-1 ratio. The subwave counts are more important. Okay, so understand where the subwaves are going. So where is the next 5-wave structure? Where is that likely to end? That's more important than the macro ABC structure. Okay, but more look out for most common area of about $1,400. Okay, so knowing this, it gives us a bit of an idea. We've used some Fibonacci-based logic. We've used Elliott wave rules and principles to help us understand that there's an upward directional move here. Okay, it's a zigzag pattern that's a 5-3-5 in the same way that Bitcoin also has this. We have a 5-wave move potentially have started going up. Okay, and inside that 5-wave move, there are 2 moves that are corrective to the downside. That could be something that we're looking to start soon. If it hasn't already started to the downside here, it's something that we should be looking forward to and then jumping in on wave 3, for example. Wave 3, I would expect to be at least 1.618. That gives us the most amount of chance that actually what we're going to end up with is for wave 4 and 5. And of course, you know, if we do hit like a 1.382, it's not the end of the world. There are some literatures out there for Elliott wave theory that says you can hit a 1.236 or 1.382, but there's just different percentage levels that actually they allow them to turn into impulsive structures or 5-wave structures like this. Ultimately, I always just look out for 1.618. It gives you the best chance, and you know, you can still understand what's going on in the market. Okay, so with all that being said, right, we obviously have our higher targets, and what we want to now check is how probable is this, right? Because sometimes the markets in crypto, they don't necessarily always follow what you would expect to happen. So let's go ahead and check out a couple of things. Okay, so we're going to take a look at the stochastic RSI. Okay, the stochastic RSI is a momentum indicator. And as a momentum indicator, it shows you how strong a move is in any particular direction, up or down. And here what we're doing is we're seeing that there's a move to the downside. Okay, we've got all these over the last kind of 4 hours or so, red candles. And what we're seeing is actually a pretty decent movement on that stochastic RSI. It's moving pretty fast, right? This basically tells us that the momentum is not down. There is very little room to the downside, or people are not necessarily willing to sell at this particular point, right? The sentiment in the space is buy, not sell. So knowing this, that actually on this hourly chart, chances are we're actually going to move up before we move down in any significant way. Okay, at least represented here on the hourly chart. Okay, so this could be our little wave 2, right? This could be the wave 2, and then we surge up with a wave 3. Okay, so we'll watch out for that. On the 4-hour chart, okay, we are overbought. So again, we can be up here overbought for quite some time. It's not the end of the world, but I would expect some kind of mini corrections to occur. And as if we actually look back here just a fraction, you can see that during this 5-wave move, we actually entered this overbought area just down here at the wave 2, and we stayed overbought until we pretty much got up into that 5th wave high. Okay, so our 4-hourly chart has been overbought before for quite some time, pretty much for the entirety of this move. So entering into this overbought area, specifically at the top of this wave 1, isn't the end of the world. We can get all the way up to the top of wave 5 and just stay up in the overbought area. Okay, so although we are overbought, we should be, you know, open to the idea that actually, you know, we can stay up here for a little bit of time. Can't stay up there for too long, but you can stay up there for a little bit. On the 8-hour chart, okay, we take a look again. We actually had room to grow on the 8-hourly chart as we were progressing on up. So when we were overbought on the 4-hourly chart, we were not overbought on the 8-hour chart. Now, this is a different variable because we are overbought now. So how high can we stay up there? How long can we stay up in the overbought area? You know, so we should be a little bit cautious there. Okay, a little bit of caution should be applied when it comes to starting to stack up some of these macros timelines in an overbought area. the daily chart, guys. The daily chart is almost overbought. So basically what I'm saying here, or what this is indicating to me personally, is that as soon as we hit that kind of fifth wave high, that $1,400 or range or so, we're going to be heavily overbought on our hourly chart, heavily overbought on the 8 hour, heavily overbought on the 4 hourly, and most likely overbought on the hourly. And that is really where we then see the next collapse coming in. Okay. So the next big move to the downside is likely to occur. But again, we should be cautious because just because, you know, $1,400 is indicated within an Elliott wave theory with a 5-wave structure, etc., 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 it is possible that actually, you know, this market can reverse very quickly on us. So we want to be aware that if we are opening up any long positions, that we use proper risk management, etc. Now, with all that being said, it's important to note that I'm not a financial advisor. I cannot offer you financial advice. I simply cannot do that. I can give you my thoughts and opinions on the data in the charts as I see it, but none of this should be considered financial advice. I am not a financial advisor, and that is something that I would not be doing. But guys, that kind of gives you a bit of a view and a bit of an understanding as to what I'm seeing here. Let me actually just get rid of some of these. Drew too many dots on there as I was trying to get rid of the stochastic. Come on, there we go. So it gives you an idea as to what is going on in my mind, what I think is occurring here on the charts, what the most probable outcome here is. In my opinion, the most probable outcome is that we are going to be surging up, completing this zigzag pattern. Once this is done, I think we are actually going into a complete collapse. And I've spoken about this before, essentially where if we come up into our weekly, and we bring this back down now. I have this as high as 1,300, right? But if we do go up to that $1,400 range, then all of a sudden, you know, what we are talking about is moving down into the $600 to $800 range, right? It's going to be pretty low for Ethereum, and basically, like Bitcoin, this is tracking a 5-wave structure to the downside. Now, Bitcoin could avoid it, and hopefully Bitcoin will avoid it. But it doesn't look like Ethereum is going to be able to, unfortunately. Ethereum, in order to be able to avoid this now, has to move up higher than 2150, so $2,159. Right, it has to move higher than this yellow line here to invalidate the 5th wave lows. So unless that happens by some kind of stretch of a miracle, we will probably see Ethereum down lower than $700 in my opinion. Guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.